Hello traders, Gary Wagner here. Just about 2 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, January 14th, 2021, and this is the Daily Report for Gold and Silver. President-elect Biden came out today to announce his proposal for the next round of stimulus. The bill will come in somewhere around $2 trillion. That means that after 3 collective rounds, we're looking at $6 trillion of new debt, an increased budget deficit, and yet gold moved down. I find that a little perplexing, but we'll discuss that during our technical studies. But let's take a look at gold pricing first. Traders, we had gold and silver futures close lower on the day, with platinum and palladium closing higher. We are looking at the most active February contract of gold, 1846.30. That puts it down about $8.60. Of course, the trade that we are currently in is the April contract, down also $8.90 at 1849.90. While there is absolutely no doubt that after hitting the high at 1962 and dropping down to just below 1830, we saw the market definitively consolidate, but consolidate with a series of lows 3 of the 4 last trading days that came in below what we consider to be a deep retracement at 61.8%. Now, a retracement can go as deep as 78, but really the rule of thumb is that this particular low that comes in here cannot break the lows that are right here, which are at around 1767. That being said, we have seen the market under pressure. However, in my opinion, there is a saving grace, and that is the series of real bodies. And of course, the definition of a real body is the space variance between where a market opens, where it closes. And what has been extremely unusual about what we've seen in gold lately is we've seen these series of lower lows here, but on each occasion over the last 4 trading days, the market has closed and opened above the 61.8% retracement area. And the reason that is so critically important is, remember, with Japanese candlesticks and Japanese technical analysis, the most important focus is on the relationship between where a market opens and where it closes, not the highs or the lows, and not the close compared to the prior close. And the fact that we've got these very, very narrowly defined ranges between the open and close tells me that we have a market that is absolutely in consolidation. Secondly, the fact of the matter is the consolidation is occurring above the 61.8% retracement level. While I'll feel much more comfortable when we see gold trade on a closing basis back above 1864, I still have hope that we will see gold consolidate and then return to its rally mode. The primary reason on a fundamental basis that I continue to maintain a bullish stature is the underlying fundamentals. President-elect Joe Biden announced today that his next round of stimulus, meaning round 3, will total now a $6 trillion expenditure. $3 trillion on the first round, $1 trillion on the second, and $2 trillion on this upcoming round, which should come shortly after the inauguration itself. And based upon that, we have now incurred a much greater budget deficit, we've incurred much greater debt, and the economic fallout once the pandemic is over will have to face the piper and pay the bill. Traders, we are looking at spot or Forex gold. We are recording this after 1 o'clock in Honolulu, 6 o'clock in New York, meaning this is the aftermarket as we trade in Australia, currently fixed at 1848.10. March silver futures currently at 25.61 cents. In this case, I would disregard the net change because we marked ourselves at the close at $25.56. So we're actually up about 3 cents from that price point. I have recently been more bullish on silver than on gold. There's a few reasons. One of the things that I can tell you is that it's quite easy to see this lower level support line simply created from this low here and this low here. I believe that that carries a strong level of support in that area. At the same time, we must note that we are butt up against a fairly major resistance area, 25.75 to round it up a little bit, and that is the 23% retracement. Now realize the retracement that we're using is a very long data set similar to the data set that we have been using in gold. Most importantly are the time cycles and data set that we are using for both gold and silver because they both start mid-March. This is the point when the epidemic officially became a pandemic. It goes up to the record top of the year in silver, $30. In gold, a all-time record high. We've seen this consolidation pattern that was different than gold, but we can also say that besides this lower trend line, we've got a much tighter trend line that was broken through. But I believe that what is the most important aspect as we look at this chart is the fact that in gold, we've seen a tight consolidation, almost doji-like candles. When we look at silver, and let me go ahead and blow that up a little bit, we don't have the small body sizes that we had each and every day over the last 4 or 5 days. We did get a couple of them here, and what makes me more optimistic in terms of the upside potential of silver compared to gold is today's candle. That was this large green candle here. This, of course, is the beginning of the trading session in Australia, and we would need to see follow through and a close above 25.75. That would be a key and critical point. Traders, my recommendation is to maintain your current long positions in gold, forex, and futures, silver, forex, and futures, as well as SLV and GLD. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.